Hello, this is Brian Resney, president of Resney Wealth Management. It's question and answer day. One of the questions that I want to cover, because we're getting a lot of these questions in regards to bond or bond investments in your portfolio. And how much should you have in bonds? We have a lot of calls coming in from our radio TV shows about investors who are telling us how their investment returns have been kind of lackluster the last 2 or 3 years, and they're starting to realize maybe it's because they have too much money in bonds. Let me explain how this works. In the real world of investing, you should have what's called an adaptive investment strategy. That's how we manage money. But I will tell you, if you're working with any Wall Street firm, any bank, any insurance company, they all do what's called asset allocation. It's buy and hold. You always have the same allocation pretty much all the time. Regardless if you should have a lesser allocation in bonds, you're still going to have too many bonds, in our opinion, at the exact wrong time. That's how these firms work. They buy and hold. They basically collect a fee to do what's called an asset allocation approach. To us, that's completely wrong. There's times you want to own lesser bonds. There's times you want to own more bonds. There's times you want to own less equities, or more in real estate, or more maybe in gold, or more cash, or more inverse ETFs. There's times you want to change that portfolio. Now, adaptive doesn't mean you're changing daily. It means you're adapting to the changing economic scenario that you are currently dealt. So that means if the economy is growing and interest rates go up, and we are looking at clear skies, hopefully for the next 12 to 24 months, you should be in more equities. You should have less money in bonds, or maybe different kind of bonds. But again, Wall Street firms, banks, and insurance companies do what's called stock asset allocation. It's that pie that's all divvied up in 20, 30 different investments. In our opinion, that's a failure. You need to be adaptive. There are times, again, you need to change that portfolio up, given the cards or the time frame we're in, based upon economic changes. Too many investors, we find, have an over-concentration in bonds and the wrong kind of bonds in their portfolio. And unfortunately, if the economy keeps on this track, you're not going to be a happy camper over the next 3 to 5 years, in our opinion, because rates will slowly move up. You'll lose a lot of money in your bond portfolio. Maybe your other stuff does well, but at net, you're probably not going to make any money, or maybe even lose a lot because, again, over allocation to bonds. If you're not a client of our firm, give us a call. Find out the real facts about real money management and real advice. Adaptive investment management, which always includes a risk management strategy at our firm. We'd love to talk to you about your portfolio. We do manage accounts that are $500,000 and greater. Give us a call, schedule a consultation, and make sure you have yourself a safe and profitable day.